Hello, hello. Am I audible? Hello, hello, hello. Rising in. There's a problem. So why today the Indian equity market has shown us a drop and the slide? The reason is this Japanese yen is rising. So when the Japanese yen increases, the equity market, emerging equity market doesn't like it. So this is one of the indicator of being, we have to be cautious about the equity market. So this complete setup of, if you see, in the when the market was sideways, this was a scenario. Market went up. Okay, if you see, the yen was going down. Since yesterday, you find the yen has given a bullish move and almost holding above the trend line. Now, if that trend line has been cut by these Japanese yen versus dollar, that means dollar has been sent back to Japan, and demand of yen is rising. So when demand of yen increases, basically it shows that there is a sell-off happening and the money is going back to Japanese market. If you see foreign institutional investor, they borrow funds from Japan, deploy it in the emerging markets, and when they deploy that in the emerging market, okay, sometime they will book a profit, and when they book a profit they will return back that fund to Japanese market, and the money from Indian equity market is going out. Now how do you know about it? No, so very simple. We will track Japanese yen as well as we will track USD INR. I'll show you currency. Indian rupee, USD INR. Okay, and if you see here, in last few days, this is the scenario. The demand of dollar, okay, is high, and that is how the price of dollar is going up. So I'll just give you very simple explanation. There is a sell-off happening by a foreign institutional investor in Indian equity market or globally in the emerging market, for example, and they will sell it, the shares. They will convert that rupee into dollar. That is the reason dollar is rising, and rising dollar they will give it back to Japanese yen, to the Japan people, and then the Japanese yen is rising. That is a sign of concern. Another sign of concern here is the US India deal, trade deal. That's a again, we are playing around when it's going to happen. If it happens very positively, just like Japan, our market will show a sharp upward move. But I will track gold. The price of gold will help us understand basically uh, why. If I show you, okay, so these are the levels, and market is respecting these levels fantastically. If you follow the gold futures, right? So this is how the market is. This is the very big resistance zone area, and here if you find, the market has shown us trying to give a breakout, and this is in last 2 3 days it's just going down. This is where the market is now. So these are the support areas if you have to market. So why now the gold prices are coming down? So there was a fear, there's a fear factor coming down about the tariff war, and that is the reason silver and gold is going down. I'll just show you silver as well. So rising gold is a way of understanding the market, the fear in the market. Second, this one. Now, see, gold and silver, they are showing there's no fear in the market. But in India, there is something called as India VIX. And that India VIX is what we have to understand. India VIX, I'll show you. Silver is also showing that I am tired of going up now. I'll just relax a little bit and bus probably it will again go up. Silver is a different story altogether. India VIX, if you see from last few days, it's so low. And when it is completely in these kind of ranges, uh, uh, falling VIX and a low VIX is a sign that there can be any side big volatility can happen. Okay, so India VIX is giving us some idea that market may show us sharp any side move. So it can be move upward, move downward, any side. All right, and this is what we have to understand basically about the markets and the correlation in the market. Now, let's understand Nifty chart. So earlier I used to post the analysis about the market. Now this is what the chart was showing yesterday. Now these are the uh, I'll use a rectangle for the better understanding purpose. So this is the area where the market is facing a resistance. So unless and until market crosses this level, okay, and holds above it for 15 minutes. So that level is around roughly 25 to 150. We will not see the next up move. And here market is in this. If you see long-term trend line, this is a trend line where the market is facing a problem. Recent, this was a trend line which the market was has crossed. Okay, but that was up to this level, which is already been touched by the index. Now, how do you look at this market now? So this is what are the support for the market. Now we are heading for the monthly expiry, and there we can expect a big volatility. Imagine the news, positive news comes in the market, so the market will give a fantastic upward move. And if something bad comes in the market, right, then these levels, okay, once 2530 is gone, 30 35, that level is gone, we will see 24,922 or 24,800, approximately these ranges. Okay, so this is what we may see in the uh, recent low. Recent low is this 2 piece, also 24,850. And next is this. So the orange color lines are for the support purpose. Unless and until the price breaks and holds it here, we will not see a downfall. And the further up move can be seen if the trend line is being broken and hold above this. So in, let's not make it very complex, let's make it very easy. So tomorrow if price holds above this, opens above this, and it can go to this level, or else if this is the price level where you find the price sustains below this level above for 15 minutes, we will see a further slide in the market in this level. Okay. Uh, Recent time, the concerns are not Indian market concerns. The concerns are global market. And 31st is the date. 30th is the date where U.S. Federal Reserve will decide the interest rate. Okay, expecting that there will be a rate cut, so the market will, in the assumed game, market will behave, and market is always forward looking, so you will find the market will adjust itself before something is been announced. For an institutional investor, they are continuously selling in the Indian equity. So short term, yeah, there will be volatility, and unless and until this volatility will be probably for the monthly expiry also. So it's for just understanding purpose. If you really liked it, you can just comment on it. Thank you.